strong week of gains with the Dow, yes, closing above 40K for the first time ever. All three major averages are up well above 1% for the week. And joining us now is Deepak Puri of Deutsche Bank. Deepak, good to have you. So I won't necessarily ask you to talk just about Dow 40K, though we do have to mark the moment. It was a strong week overall. We're probably in a stronger position than a lot of people thought we would be at this point in the year. Any significance to the tech news we're getting next week in getting this to continue?
No, absolutely, John. First of all, great to be with you. It's a historic day, 40K up on Dow. I think part of the rally that we have seen is really driven by the fundamentals, and we're going to see big news on the fundamentals come next Wednesday. So I think the market is a little bit, preparing itself because it expects a pretty bumper draw, I guess.
Okay, let's add in Scott Chronert, Citi Research head of U.S. equity strategy. Scott, happy Friday. So we're right there. Right there at 5,300 on the S&P, edged up today. You think the CPI read we just got this week, not too hot, might warrant a move higher from here?
Well, so I think the CPI read, in addition to the employment data, from last week, all just kind of set the stage. And you mentioned earlier, we've seen the bond market rally, which has kind of given this rally some new life. And so as quickly as we sold off heading into Q2 around the earnings period, beginning mid-April, the data and the conviction that this incrementally hawkish Fed narrative is receding has been enough, I think, to stimulate new money flow to equities.
Interesting. So, Deepak, I do want to go back to the Dow right now because it's a big headline maker on newspaper front pages to the degree that we still look at newspaper front pages. But to a large degree, the big stocks we've been talking about for the past several years have been the once named Magnificent Seven. What's the significance of the Dow in the environment that we're in right now?
Well, it just tells you that the rally has broadened a bit. It's not just because of the tech. Dow has much more industrials, a little bit more value tilt to it than, let's say, the S&P. So I think this earnings season, we have seen how, some of the other parts of the markets are also, pushing their weight. So be it financials, be it industrials, utilities is having a moment. So I think it is just not a Max 7 rally anymore. It has broadened out a bit, which is heartening to any, bull out there. And the only thing I would say is, and I completely agree with Scott here, that, the markets might be a bit premature to start factoring in rate cuts just because we've gotten, one non-farm payroll number, below 200K or a slight miss on the nominal CPI does not mean that the Fed is just ready to start cutting rates. From our estimate, probably it's not going to happen until the September meeting at best. Okay. And Scott,
on a day where we do see the Dow hitting 40K, at the same time, the Russell 2000 smaller stocks are a little bit in the red. Is this enough broadening? And what does it tell us, the relative lack of action in the Russell, though it is higher for the year, of course, and doing okay? Well, what does that tell us about the state of this market?
Yeah, I think the broadening discussion has been going on for many months. Heck, we've been talking about it since last summer in terms of an earnings broadening. And early on, the view was, hey, we want to be barbelled growth with cyclicals as a means of getting to an eventual change in the Fed hawkish paradigm. Now, what you get with small cap is a higher degree of economic sensitivity. You even get a higher degree of debt leverage, if you will. And so the impetus on small cap to more purely reflect underlying economic conditions is there and is more relevant than it is for the S&P 500. So essentially what you're getting here, well, I think small cap has been volatile of late, but I do think that as you get closer and closer to this inflection in Fed, we have to be aware that what's going to come with that is a little bit more concern regarding economic trajectories. But all told, the valuation for small cap is setting up for this to become an ongoing broadening and rotation trade as we go into the second half of the year, in our view.
Okay, Deepak, in that context, you like tech and comm services sector-wise. Why?
Well, it's a secular growth story here, John. I mean, when you look at, earlier this year, there were concerns that the prices might be pretty much ahead of fundamentals, but the earnings season has shown us, when you look at EPS growth, revenue growth, capture of market share, a lot of these companies are still doing great. We have the AI tailwind with us. So it really warrants thought that how you could have a somewhat of a positive opinion on S&P without the tech and communication services not performing. Comm services for me has been a standout. If you look at from March 31st to now, the number of positive revisions that we have seen has been the best out of all the 11 sectors, and EPS growth year over year is also the strongest. So really, I think interactive media, wireless, and comm really, spotlighting that. But both the sectors look really positive to us from here on to the rest of the year.